Hi there, welcome to Neppy Invest. I talked about a company I had a first look at the other week, and this company is called Nexion Group. Nexion Group listed on the ASX in February 2021. And typically, when a company lists on the ASX, I don't really think about buying that company for at least 6 months until I see the first financial results from the company as a publicly listed company. Now, Nexion Group is a fairly small company, not a lot of revenue. They are unprofitable, and they are releasing quarterly reports and also, of course, their half-yearly and year reports. And all the quarterly reports and yearly reports I have read from this company, or the financial statements, I didn't really feel the need to go or do any more research on the company until they released their September quarter results. Now, in the September quarter results, this company was operating cash flow positive, albeit a low number, something like $33,000, but it was positive. And that gave me a little bit more incentive to take a closer look at this company and to figure out whether this company belongs on any of my watch lists. When a company IPOs on the ASX, and more than likely they do this also on other exchanges around the world, is they release a prospectus, among other things. And the prospectus is a fairly detailed, long document, and you can view the prospectus as a marketing tool from the company to get investors to buy into the IPO. But I usually find that the prospectus a company does release in their IPO is an absolute trove of information, not only in the company, but also the industry the company is within. And that is definitely true with Nexion Group as well. So the first thing I did when I wanted to learn a little bit more about this company is go straight to this prospectus. And this particular slide is sort of the first page in their prospectus. And this gives us a broad idea about what Nexion does. So Nexion is an emerging cloud network security and data center group of companies. They offer cutting-edge hybrid cloud services and end-to-end information technology solutions to enterprise customers. Again, this is a broad definition of what this company does. I want a little bit more of a more defined definition of what this company does. Refined definition maybe is a better word. And in fact, when I do read this description of the company, the thing that really stands out to me is this is a dime a dozen sort of company. There's a lot of these sort of companies, not only on the ASX, but also not on the ASX, private companies, those sort of things. So the main thing I want to know about Nexion Group moving forward is the sort of moat this company has, or competitive advantage, or even what quality management this company has. And it's really, in my opinion, it's really hard to figure out the quality of management for companies that have just IPO'd, for management groups that haven't been in the spotlight for very long. So we can't really know with definite precision the quality of management of Nexion Group. And when it comes to the moat or competitive advantage, just by what they are doing in a broad sense, I probably would say that Nexion Group doesn't have much of a moat or a competitive advantage. Another thing I want to know or read about in IPO prospectus is how the company is deriving or getting their revenue. And this is usually found in the business model. And for Nexion Group, this was section 6.2. And they just mentioned here, their revenue streams are from different areas. For instance, their core revenue stream are from renting its one cloud infrastructure to customers on a monthly fee, delivering project management and technical resources to deploy new technology, selling new network solutions from telecommunication providers, selling third-party technology, including cybersecurity products, blah, blah, blah. And straight away, again, this raises the question of what this company's competitive advantage is over its competition. And this company would have a lot of competition out there. Also, the Nexion's core sales focus is to generate recurring revenue by renting its hybrid cloud platform to corporate clients and channel partners. So again, the same questions come forth. What is the competitive advantage of this company? And it is no shock that the area, the sector, the industry that Nexion is in right now is highly competitive. And they actually address this in section 6.4. Nexion considers the global hybrid cloud market to be highly competitive. The technology Nexion utilizes to create its cloud is generally available and the price elasticity is relatively low. So again, the main question we need to know is what competitive advantage this company has, what moat it has, and right now it seems like it doesn't have a competitive advantage at all. And that is a little bit troubling because ideally the companies we want to invest in have a pretty good competitive advantage, have a pretty good moat, have pricing power, all those sort of things. And I would suggest just by reading what Nexion Group does, just by reading section 0.4 here, that this company has no competitive advantage, no moat, and no pricing power. Now to a few facts in regards to Nexion Group. Company is young, founded in 2018, so about 4 years old, and it only listed on the ASX on the 18th of February 2021. So coming up to the 2-year anniversary that Nexion Group has became a publicly listed company on the ASX. The current CEO is also the co-founder, Paul Glass, while the current CEO, Kevin Reed, is also a co-founder. Combined, they own about 30% of Nexion Group. So there is skin in the game here. I do know some investors who only buy companies where there is skin in the game. Another way to look at this is Paul Glass and Kevin Reed's personal success is highly aligned, almost 100% aligned to the success of Nexion Group. So they're going to put all their time and effort to make sure that Nexion Group is going to be successful. Doesn't mean it will, but they will try their hardest to make Nexion Group a successful company. The market cap of Nexion Group, and this is a little bit complicated, and I'll talk about why the market cap of this company is complicated, because at 5.6 cents, the market cap of this company is 4.5 million. Now, when I set up this video, on the day I set up this video, this company announced a capital raising. And upon the announcement of this capital raising, the share price dropped about 30%. So I'll talk about this capital raising later in the video. So in fact, when this capital raising goes through and the shares of this capital raising are added to the registry, the market cap of this company at 5.6 cents would be actually noticeably higher than 4.5 million. And the ticker code of Nexion Group is NNG. So I know what this company does, and what they do doesn't fill me with a lot of confidence about the future success of this company simply because of the lack of a moat or competitive advantage and lack of any sort of pricing power of this company. However, in saying that, the company is growing pretty strong. So the next thing I do when I go over the prospectus fairly quickly is go back to the last financial statement. And for Nexion Group, that was the financial year 22 numbers. And when I say financial statements, I'm talking about half-year or yearly statements, not the Appendix 4C or 5E. So I went back to the financial year 22 release, the cash flow statement, the balance sheet, the P&L statement, but I really only focus on the cash flow statement. The first thing that is noticeable is that this company is small in terms of revenue or cash receipts. Only $6.8 million of cash receipts in financial year 22, but significant growth from last year. In fact, more than doubled from financial year 21, increasing from 2.7 million to 6.8 million. The company hasn't quite reached any sort of scale in terms of cash flow or operating cash flow, because the company is actually more operating cash flow negative in financial year 22 than last year, even though receipts have more than doubled. So in financial year 22, the company was operating cash flow negative by $3.3 million. A few other things I'm looking for in investing and financing activities. I'm looking for any really high numbers here. The only high numbers here are in relation to an acquisition in investing activities and also the issue of shares in financing activities. But overall, the cash on hand at the end of the financial year was only $1.2 million, falling from 4.8 million. So as soon as I read this, I knew that there might be a couple of raisings soon because I have to increase the cash on hand because of the rate of burn cash this company has had in the past year. And that's exactly what the company has done. They have done a capital raising. So that means more than likely, well, not more than likely, that means in the future, there will be less need of a capital raising. So some investors actually do wait for that capital raising, particularly if they see there is a high probability of that capital raising. Because a lot of times when a company does a capital raising, they will do that capital raising at a fairly big discount. And Nexion Group actually did their capital raising at a fairly big discount. And when they see that capital raising and there's that fairly big discount, share price takes a bit of a tumble. And that's when some investors will take the opportunity to buy into a company, because there is a possibility that that could be the last capital raising. Maybe Nexion Group won't do any more capital raisings in terms of working capital. They might do capital raisings in terms of if they need cash for an acquisition, that sort of thing. But I'm not saying this will be the last capital raising the company does. I'm just saying it just decreases the probability of a future capital raisings. Anyway, that's beside the point. Now, the next thing I want to know is sort of where that revenue is derived in different divisions or segments of the company. And this is called disaggregation of revenue from contracts with customers. This was found within the notes of their financial statement. So they have a lot of different categories or segments here: networking, security, data and managed solutions, data center, consulting, voice, and cloud. And they're all growing fairly quickly, apart from data center, which went backwards in revenue. But the other ones have grown fairly quickly. Based off revenue in financial year 22, voice went from nothing to 1.8 million. So more than likely that would have been because of an acquisition. Networking increased from 464,000 to 1.2 million. Consulting from 154,000 to 909,000. Cloud 694,000 to 1.1 million. And security actually also went backwards, 235 back to 97,000. So the main growth areas here for Nexion Group look like it's going to be networking, data and managed solutions, voice, and cloud. Now let's have a look at the Appendix 4C, the first quarter of financial year 23. And this was really the inspiration for me doing today's video, because Nexion Group was operating cash flow positive by $33,000 in this quarter. Receipts to customers also pretty good at $2.3 million. So as soon as I saw this particular statement of cash flows in the Appendix 4C, I thought to myself, I need to take a closer look at this company. But cash on hand, even though this company was operating cash flow positive, cash on hand actually fell slightly, because not many companies wouldn't spend any money on financing and investing activities. But the main thing here is Nexion Group didn't spend a lot of money in that, so the cash burn overall, or the free cash flow, was not that great, or free cash flow burn was not that great. And cash on hand at the end of this quarter was $1.237 million. Next thing I wanted to see is the growth in receipts. Now, we knew from the financial year 22 financial statements that there was pretty good growth in revenue and cash receipts from financial year 21 to financial year 22. But I just want to take a closer look at cash receipts growth over the past 7 quarters. I prefer at least 8 quarters of history to determine whether there's any growth in receipts. And we're 1 quarter away from that. And if we just assume that the receipts in the next quarter for this company will be at least above about $2 million, we can say with fairly good confidence that receipts are growing for this company, increasing from $530,000 in the March quarter 2021 up to $2.3 million in the most recent quarter. So receipts have increased by almost 5-fold over the last 7 quarters. One of the main reasons, one of the main inspirations for me doing this video was the fact that this company was operating cash flow positive. The other reason I decided to do this video was because of a capital raising. Now, this capital raising was announced, and then the share price dropped 30%, or 2.4 cents, which actually didn't surprise me, because the shares in this company are illiquidly traded. So if someone wants to sell out after they saw this capital raising announcement, there would be not much buying going on, and there would have been a fair bit of pressure on the share price as this announcement came out, and that's why the share price fell a lot. So not surprising. This actually does happen a lot for these type of companies which are illiquidly traded. A little bit of selling pressure, and you can see the share price take a significant hit. And that actually does lead to opportunities for us to buy into a company like Nexion Group if we like the future of the company at much better valuation. So 30% drop in share price. You'd much rather buy the shares in this company at 5.6 cents rather than 8 cents. Now on to the capital raising, sort of a 1-for-1 entitlement ratio. So current shares on issue, 128.5 million. Shares to be issued under the offer, 128.5 million. The price of the offer was at 5 cents. So that's another reason why the share price dropped about 30% towards that offer price per share. So a significant discount, because the day they released this capital raising, the share price was at 8 cents. So about 30 to 40% discount in this capital raising. The other thing is the options. So first thing I should mention is shares on issue will double from 128.5 million to 257 million. The other thing is the options. So options currently on issue are 14.6 million. New options to be issued on the offer, 128.5 million. So it seems like in this particular capital raising, if you own a share, you're able to, in the capital raising, able to buy another share, and also attach that share is an option. So the options increase from 14 million to 149 million. Not sure what the price of those options are. Say if they're at 4 cents, then they're already in the money. I think that's the correct phrasing there. So anyway, so interesting capital raising, but these are the sort of things that happen to these small companies that are not yet profitable, that are not yet operating cash flow or free cash flow positive on a consistent basis. You are going to see these sort of capital raisings, and some of these capital raisings are done at large discounts. Now onto the daily chart for Nexion Group. Just ignore sort of what I'm doing in this chart. So I've included actually 13 moving averages in this, and I'm actually using what's called the GMMA, Guppy Multiple Moving Average. So I'm using 6 very short-term moving averages, 6 medium-term moving averages, and I've also included 1 moving average which is not part of the GMA, and that's the 100-day moving average. And I'm liking what I'm seeing. I'm starting to explore the GMMA, and it seems like it might really suit my investing philosophy. Well, probably not investing philosophy, we'll call it trading philosophy, but I needed a little extra detail, and that's why I've also included the 100-day moving average. I might do a video on this in the next few weeks or in the next month or so, but it's something I'm exploring right now. But just ignore that. The main thing to take away from this particular chart is the negative sentiment in this company. So when this company initially listed on the ASX, there was a fair bit of hype, particularly in the first 2 weeks. In fact, in the first 5 days of trading, the share price went from a low of 18 cents to a high of about 41 cents. So the share price more than doubled in those first 5 days. Not only that, there was a lot of volume. So when you see a lot of volume in the first few days, well, it's not unusual to see a lot of volume in the first few days after a company has IPO'd. And that's another reason why I prefer to wait after a company has IPO'd, to wait until a company has released their first financial results before I even think about buying a company, unless a company releases a profit upgrade. And the reason why is perfectly illustrated by Nexion Group. After that initial hype in the first few weeks, share price reached a high of 41 cents. The share price has been drifting down. It's been drifting lower and lower, continues to drift lower. In fact, the share price has decreased from 41 cents to a low of about 5 cents, or just above 5 cents. So that's a pretty big decrease in share price. We're talking about a 90% decrease. And the share price has been in well-defined downtrends for long periods of time during the past 2 years. Now, when the company did release the September quarter results, there were segments of the market who saw that this company was operating cash flow positive, and there was a little bit of hype. And when I say little, I'm meaning not much. But that little bit of hype in Nexion Group put a share price from about 5.5, 6 cents to a high of 11 cents. So the share price about doubled because of this little bit of hype. But the problem with that little bit of hype, it was not a lot. The trading was done on very small volumes. You want to see really large volumes coming in when you see this sort of result, because you want to see large portions of the market getting interested in the company, because that large portions of the market getting excited in the company will drive the share price higher and higher, because eventually you'll see like day traders coming in and trading, and that's exactly what you want to see to push a share price high. You don't want to see low volume, because when you see low volume, the day traders aren't interested. Even the shorter term non-day traders are not interested. The only people pushing the share price here are probably those investors who knew about Nexion Group, who waited for the Appendix 4C, saw the company was operating cash flow positive by $33,000, and they just bought on market, and that's why the share price more than doubled. And then After that initial small amount of hype died away, the share price started to drop. In fact, the share price has dropped from 11 cents to 8 cents. Then they announced a capital raising, and the share price dropped from 8 cents to 5.4 cents. Now, I am recording this video before trading has begun the 28th of November, so there might be a little bit of a rally today on the 28th, but on the 25th, the share price closed at about 5.4 cents, down 30% from the previous day. So at this point in time, I have no interest in terms of what this company does for a long-term purchase. And really, when you look at the chart, nothing too exciting here. In fact, the share price is at an all-time low. And you really don't want to buy into a company when the share price is at an all-time low. Unless, of course, you think there's value, but I probably would define Nexion Group as a low-quality company at this point in time. And when you're talking about low-quality companies, it's all about the share price trend, all about the sentiment, because to be honest with you, I find it really hard to see any value in this company right now at this point in time. And for high-quality companies, it's all about value. And this is just my opinion. It's all about the value, while the trend in the share price, the sentiment in the company is of lesser importance. So for Nexion Group, it's all about the share price trend. It's all about the sentiment. And right now, there is negative sentiment in this company. Share price is in a downtrend. If you have any thoughts about this company, if you know this company way more than you do, and you'd like to mention any mistakes I've made, if you'd like to expand on any ideas I have made in this video, I'd love to hear from you. So leave those thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.